Well, joining us now is Richard Harris. He's founder of Port Shelter Investment Management. Richard, thanks for joining us. Of course, that's the big story, isn't it? The two co-chairmen of Sung Hung K Properties, the arrest, the release, ongoing investigation going on right now. You've lived in this territory for, what, over 42 years now. Now, tell me, have you haven't got any precedents for this?
Well, that makes me sound rather old, but I have to say
You're 42.
I'm shocked. This sort of thing, very rarely happens. If you look at Asia as a whole, very, very rarely happens in this kind of situation that people so high at the top of the food chain are even accused. I think it really is a real testament to Hong Kong and the society we live in that whether or not these allegations will turn out to be true, that we do have checks and balances in our system.
But does it have ramifications overall for Hong Kong society? Of course, we've got that big demonstration coming up this weekend, which many people taking to the streets, wanting more democracy here as well. Now, what do you think we're going to get even more people out on the streets as a result of this?
No, I don't think so. I think actually to the man in the street it might prove to be rather a popular move because, as I said, it looks as if there are checks and balances in the system and generally people like that. So, no, I think it's all in all very positive for Hong Kong. And in terms of Hong Kong's position as a global centre of trade, it's going to raise our stock an awful lot in the US, in Europe and in some of the big political blocs around the world. We now really, I think, look like a major player in their eyes.
The thing is, of course, if we get more of this, then it becomes counterproductive, doesn't it?
Well, it can do, but it still doesn't hurt in terms of sweeping the situation.
We have to also add here that nobody's been found guilty or anything like that. This is an ongoing investigation.
Yeah, I mean, the thing is, the general principle is that we do have checks and balances in our society that aren't driven by factors such as political factors or vendettas or anything like that, and it makes us a much more balanced and I think flat society, and that can only be good for our economic future.
Richard, let's talk a little bit more about the other big story of the day, and there's that fair labour report coming through about Foxconn and 50 violations of Chinese labour laws. Apple saying, well, okay, it supports fair labour, but what about Foxconn? They've got to implement that. Again, this is perhaps a look at a company, and then again, we look at it from the other lens, which is that this is a maturing economy very slowly too.
Well, I think it's very easy to suck through our teeth and say, tut, tut, it wouldn't happen here. But we have to admit that China is developing. It's very difficult to look at a market like that through Western eyes when the West has had generations of development, of thinking, in order to come up to certain laws. When you look at the serious violations, yes, they're not right and they shouldn't happen. But interpretation of Chinese law is very difficult. So when you say this is against Chinese law, you have to be very careful of the interpretation. I think, on general, it's positive. Apple appeared to have accepted all of the recommendations. They seem sensible and quite balanced, and I think what will happen is that we'll see China's labour move on.
Exactly. This is also just moving on and maturing of the economy, as I mentioned earlier, and moving from a low-grade, low-production cost, etc., to one which is just going higher and higher in terms of that supply chain.
Yeah, we're always going to have catch-ups, and maybe we've got a little catch-up to do here, and it's just part of the process of moving China up the order. Remember, the West has taken decades to think of some of these things and develop things and develop health and safety. Hopefully China will do a little bit more responsibly, but it also will start moving up that chain.
Richard, okay, the quarter that was, characterise it. It really was one of, well, two halves, one could argue, with the first half of it very, very strong equity performance and the latter tailing off a bit.
Yes, well, I think that really the first part was a reaction to the falls last year. The markets, to my mind, fell more than they really should have, considering the economic situation. And as we saw, a lot of surprises in the States meant that people got more excited. So we've seen the markets move up. My feeling is we probably, I would guess, we might well have seen the highs of the year, and we're seeing the markets come back.
Already?
Yeah, already.
Equities speaking, you're talking about.
Equities, yeah. That's not to say they will go down a lot more, but I think we'll see a lot of chop, a lot of turbulence as we go on, because there's plenty of bad news out there for the markets to hold on to.
Well, you said it's better to travel than arrive, and that's an old saying, of course. But so we've arrived, have we? And the journey was all right.
Well, I think what's happened is, if you look at the US, we probably have arrived, because we had some unexpected unexpectedly good economic figures out of the US. And of course the markets get very excited about that. When those figures start to roll over, then the markets think, well, we pretty well arrived, what's going to happen now? Is there more good news out there, or are we going to get more problems out of Europe?
Well, I mean, what is being priced in right now? Is it an American recovery having a firm footing, or is it the anticipation of it being confirmed in the second quarter? If we do get that confirmation, which we should do in the second quarter, whether this is a real growth story, well, what happens then?
Well, I don't think we're in a growth phase at the moment. I think what happened in December and January was, holy smoke, we're not going to the wolves. So things are actually not too bad. And markets always react on new news, new expectations, as opposed to old news. So that's why I think markets are rolling over a bit. Looking into the second quarter is quite interesting. If I ever become famous, it's going to be because it's Harris's law of investment, is basically that things always change at the end of a quarter. It's amazing at the end of March, at the end of June, things often change. Now that can be delayed 2 weeks or extended a couple of weeks here and there.
Are you going to have a caveat like that if you've got a law?
Well, these are the markets, you know, so things go up and things go down. It's always the exception that proves the rule. But I think that the second quarter is going to be quite choppy. We're going to have the forerunners to the French election. There's going to be a lot of spats coming back and forth, and the markets will have plenty to chew on.
That's the first time you've mentioned anywhere in Europe, actually, France. But, I mean, it does seem as though this is all on the back burner. Mario Monti saying crisis almost over with now.
Absolutely, and Christine Lagarde as well, saying, well, you know, things aren't as bad as they were. And they're completely right. But also, if you see the other side of what they say, they're completely right that things aren't as bad as they could have been. Right. But also what you're saying is, with Hillary, they're saying, well, it's not quite over, it's almost over, but there's still things out there. But hey, you have to say that if you're a policymaker.
You've got to be positive, haven't you, as well? And that allows, of course, a more optimistic momentum, if you like, and perhaps the markets get a bit sated by that, satisfied.
I think so. I think what the Europeans did was build brick by brick, and they built brick by brick. There's still a ways to go, but it's not too bad.
What would you say from a strategic point of view for investors? How do you make money going into Q2?
Well, I think it's pretty difficult. Probably the way you make money is just to stay out of the market for the moment. Don't play in the small stuff, because I think we're going to have a pretty difficult Q2, especially if we had bits of bad news coming out.
Is that regardless of region?
Pretty well, because, you know, what tends to happen is the small stocks, even though we love them, and because of the ones we research, we sort of really like them, they're the ones that often get hit when the markets come back. And I think we've probably got maybe a 10% shock left in us here, if the news from Europe turns out to be worse than everyone thinks. So
we're again travelling and arriving at another destination this time, and this time it's better to be there when it arrives rather than actually travel with it, yeah?
Well, that's the beauty of investment, isn't it? Is you never quite know where it's going, and sometimes you think you've arrived at a destination and they whip you off somewhere else. A new piece of news comes in. And markets always move on expectations on new news. When there's no real news in the markets, then they drift, and I think there's enough bad news out there for them to take the bad news badly when they drift.
And they've been drifting for quite some time right now. It seems like we're almost in some type of consolidation phase. How long is that going to last?
I think that's right. I think we'll continue to be in the consolidation phase. But what I really think is the markets tend to pick up good news at certain times and then bad news at certain times. We've been through the good news phase. We're now in a kind of, you know, where are we going to go? But there are bits of bad news out there. You know, we need to see what's happening.
Those Japanese figures, those were bad. That was bad news.
Well, industrial production wasn't so good, but the other figures, the metrics were all right.
We see inflation.
A little bit of inflation in Japan.
1/10 of 1%. That's something that may be cheering to the rafters, of course.
A hugely sexy number, but it perhaps a step in the right direction.
Well, I think actually I don't think the economies actually look too bad. In Europe, we're going to have austerity. Of course, that's going to slow things down. Of course, we're going to see some of the figures come back. But actually, underlying it, I don't think it's too bad. And if you're looking at your average country, say in Europe, roughly 10% unemployed, you've got 90% employed. Actually, sadly, it doesn't really matter what the 10% think. It's what the 90% think. Are they still enthusiastic?
In a place like Spain, you're talking about youth unemployment of 30%.
That's even worse. That's a shocking situation. It's been going on for a decade now. So you wonder quite what's happening there in a social sense.
The other thing too, like at Europe at the moment, like when I was only there a year ago in terms of at the height of it, the one thing I'm interested in is, like, is there appetite for reform there amongst governments? Like Spain seems to be a labour market reform issue which desperately needs to be addressed, but I suppose out of all the European countries, which one keeps you awake at night?
Well, I think the little ones are always going to keep you awake, you know, the Portugals. Then you're looking at Spain, and Spain looks worrying. The one that really is the big one, of course, is Italy. You know, if there are all sorts of issues with Italy. They don't really collect enough taxes. It's a very rich country.
It's all about Spain.
Isn't it wonderful you've got an Italian in that sort of position?
So funny.
But he does look good. You know, it's interesting that the system does kind of rework itself. We had a whole bunch of different political leaders last year. We've got a new set of political leaders now. Christine Lagarde, I think, is really excellent at the IMF.
It's amazing how the change in tone and what she says since she was French finance minister, then IMF and the president, and just amazing the difference of the rhetoric coming from her. But looking at this, I mean, it's not almost over, surely. We were talking about this before, and you think that they're right?
I think that in general terms we have crossed a line at which things were looking really bad.
But fundamentally, Europe can't go on paying the welfare kind of systems that they have.
Absolutely, and it's going to be a structural issue that's going to carry on for at least for the rest of the decade. If you look at the UK probably needs cuts of, say, around 20%. They may, if they're lucky, get cuts of 7% before the political pressures get too much. Fortunately, in the UK, the political system seems to accept some of the austerity at the moment, but there has to be more. But if we have more, we have less growth.
The one thing in the UK, they've got that problem of minority government. Now, where I'm from, we're seeing that minority government really kind of flounder at the moment. Like, the thing is, going back to that appetite question, they just really have to push ahead with this because they will eventually fall behind. I mean, but no one ever seems to be talking about what's going on in the US here. That jobs market, those jobs numbers are still quite good. Ultimately, if the US, you know, if they get a cold, we get influenza out here. So, I mean, but no one ever talks about the US and what the balance sheet there.
Well, we're all hanging on the US at the moment. You know, it was the good figures at the end of last year that saw everything pick up. And I think what is very important to remember that we always forget is the US is a big economy, and it has a mind of its own, and it does different things, and it's kind of thought, well, actually, the 90% or so still think life isn't so bad. So they still carry on.
What side of the fence are you? Are you on the side that believes that perhaps we'll see QE3 going into this election year, or do you think that's more or less at bay for now?
I think it's at bay for now. I think they probably won't want to do it until they really feel, unless they really feel they need to.
They need to inflate their debts away.
That ultimately may well happen, because you have to think if you had QE1 and QE2 and such a massive increase in money, then there has to be some kind of weakness in fiat money.
Yeah. That is the fiat of money, isn't it? You get, if you print money, you get inflation.
It's all money's confidence, of course. And we may well see the inflation come out maybe 2015, 2016 now. It doesn't seem to want to come at the moment. That's a good sign.
So on the flip side, LTRO3 perhaps?
Well, I think that's much more likely, because the Europeans are putting, you know, this wall, the firewall, into place brick by brick in typically European fashion, not quite quickly enough, but just enough so that only a few bits of water coming over rather than the whole wave. And I think that's going to continue. So I think they'll work their way out to the end of the day, but continue to give us a few heart attacks along the way.
It seems David Cameron has the answer to the UK's problems. Doesn't he want to slap a tax on what do you call them? Pasties?
Pasties.
Yes.
Cornish pasties.
Yes.
Sorry, I'm American.
Yes.
I never eat these
No,
things.
Cornish
Cameron
pasties. Well, I don't know. The government seems to be unable to put the blame on the last government, which is what I thought government traditionally did.
Didn't he say that he had a Cornish pasty the other day in Liverpool Street Station, and I'm not sure about this, but I think that shop closed down a few years ago or the other.
Well, it may be. If he had, he may have needed to have his stomach pumped afterwards, because they're not regarded as the finest, healthiest
for yourself. Some of them are quite nice. Sign up for Cornwall.
You obviously go to the best pasty shops.
But like, the area consumption tax, I mean, like 50% cannot be a good thing. Like, particularly we're seeing now, like, governments are short of cash, slapping on additional cash is really kind of hamstring the growth profile in the short term. I mean, I just cannot see.
It's really tough working out what you're going to tax and when you're going to tax it. And I think the only easy thing, the only way they can do it really politically is to do it bit by bit. There are stealth taxes.